Is your favorite stock about to reverse? Sometimes the market screams overbought or oversold, but most traders miss the signs. One simple indicator can help you spot potential turning points before they happen. Let's break it down. Today, we are diving into a powerful momentum indicator that every investor should know, the Relative Strength Index, or RSI. If you have ever been caught buying the top or selling the bottom, this one is for you. We will use TSLA Daily Chart as an example and see how RSI helps spot potential reversals through overbought and oversold conditions. But first, let's define what RSI is and how it's calculated. The Relative Strength Index, or RSI, is a momentum indicator created by J. Wells Wilder. It tells us how strong recent price movements are by comparing gains and losses over a given time period, usually 14 days. RSI values move between 0 and 100. When RSI climbs above 70, it may signal the stock is overbought. Below 30, it might be oversold. These levels help traders anticipate potential reversals. Now let's talk about how RSI is calculated. It typically looks at the last 14 periods, days, hours, or candles, depending on which time frame you use, and compares the average size of gains versus losses. The result is a number between 0 and 100. The higher the average gain compared to losses, higher the RSI. The formula may look complex, but you don't need to remember it or calculate RSI yourself, as most platforms handle it automatically. Still, it's good to know how it's calculated. So how do you actually read RSI? When RSI falls through 30, traders often see that as a potential buy signal. The stock may be oversold. When it goes above 70, it might be time to sell. The stock could be overbought. But remember, RSI is about probability, not certainty. Always combine it with other signals like support or resistance levels or moving averages, especially moving averages. In the previous video titled Master Moving Averages, I had highlighted the importance of key moving averages. The link to that video is available in the comment section of this video. It's a must watch. Now let's see RSI in action on a real chart. So we are looking at the daily chart of Tesla, and as a disclaimer, I do have a position in Tesla. So let's add RSI indicator. So we'll go to the top right corner and click on indicators. And here we can either scroll down, either we can search or we can scroll down and select RSI. And so this is the default setting for RSI that Yahoo Finance offers. It offers a period of 14 days, which we will also use. But you will notice that for overbought and oversold, it uses 80 and 20 as opposed to 70 and 30 that I'm using in this video. And let's use 80 and 20 and let's see the pros and cons of using 80 and 20. And then you will understand why I use 70 and 30. So we'll say done. So this is the RSI line. And basically, if you look at on the right side, you will see 80 and 20 as our overbought and oversold settings. So whenever RSI goes above 80, which it did back in December of last year, it basically fills the gap so that it's visually easily visible. And you can see that by using 80, it perfectly captured the day Tesla was overbought. And actually, if you look at this, this is 17th of December and Tesla topped the very next day. So you would think that 80 is perfect and we should use it. And you would have a point, solid point. But by using 80 and 20, you miss out on other opportunities that 70 and 30 offers. So let's use 70 and 30. Let's change the setting. And let's say 70 and 30. Done. Now, if you look at this chart, it shows you a bunch of other areas that 80 and 20 didn't show. First of all, back in November, when Tesla broke out of its base, within 4 or 5 days, it rose sharply, and it created an overbought situation that some traders could have used. And then, of course, there was this huge area when, in December, Tesla actually topped. And then on the right side, you will see that in late February and early March, Tesla created an oversold condition. And by using 80 and 20, we would have missed it. So this is the advantage of using 70 and 30 as opposed to 80 and 20 that Yahoo Finance offers. And the thing is that you can use 70 and 30, but you can take action based on 80 and 20 if this is how you prefer. So this is a very good example of how RSI can help you spot opportunities of potential reversals. This Tesla Daily Chart is for your reference. It clearly highlights RSI line and RSI zone with overbought and oversold markers. Actually, I would love to know how you would have handled Tesla. Would you have used moving averages to complement RSI in your decision making? Do you use RSI at all? Do let me know in the comments. You can also take a screenshot of this chart and use it as a reference for your future research. RSI is powerful, but it's often misused. One of the biggest mistakes? Assuming RSI always means reversal. Overbought doesn't mean price will drop immediately. And also never rely on RSI alone. Combine it with price action or key levels or moving averages. And remember, time frames matter. A 5-minute RSI signal is very different from a daily chart RSI signal. Finally, what are the key takeaways? First, always use it alongside support or resistance levels. Never use it alone. Add a second indicator like MACD or volume for confirmation. I'm going to cover MACD in the next video. Adjust the period to match your style. Shorter for quick trades, longer for swing trades. And most importantly, use RSI as just one of the tools in your kit, not as a crystal ball. If you found this video helpful, do like, subscribe and share. Thank you.